Hello and welcome. It's Weekly Tax Talk. I am jumping on about a minute early here. One thing is we are trying to ensure that we are actually live on the correct format. I think last week I tried to stream directly into the event, and we're going to do something a little different and see if this is working. One thing is I would like to ask you, if you would please, hang on a second here. Okay, let's mute audio. And I want to ask you, if you would, if you're watching this, do me a favor, give me a thumbs up or just say hi in the comments. Reason is, I would like to see if people are hearing me okay. So anybody there? Say hi. Let's see what's going on here. Weekly Tax Talk is time I set aside each Saturday at Rocky Mountain High noon. And the idea is just to talk about a topic every week, something just kind of short. And I've kind of tended to ramble the last couple of weeks. I'm also not 100% confident that this is actually getting seen. Shows live on Facebook. Let me fool around with things. Says it's live streaming. So if you can see this now, please do go on ahead, pop in, and give me a comment here. I'll try commenting. Let's see. If I hit comment, somebody say hi. Oh, really? Yes, but I am. Okay. Just on my news feed, I do have one person checking to see if this is in fact feeding. And I'm going to turn down the phone so you can't hear it. So we'll get this figured out. Eric Owings EA is live now. This week's topic is going to be estimated taxes, by the way. Hang in there with us. I know if you are watching this later on recording, okay, I do have one person that's seeing me. Okay, good. Okay, is on newsfeed. All right. So it looks like we are live and it's on the news feed. So if you're watching this later, thanks for the unnatural and weird pauses. It's just one of those things when you're getting one of these things going. I've invited a number of people. Maybe Saturday at noon isn't the best time, especially in the spring when the weather's getting to be nice. But the thing of it is I've got to be able to do this when I've got free time, and there's really no such thing. I'll be working all day. Probably will be right through May 17th, which is, by the way, the IRS tax deadline this year. So if you don't know that yet, they have extended the deadline to both file and pay for regular individual taxes. This deadline is not extended for C Corporation. So if you have a C Corp and your return is due April 15th, it still is. And guess what? You got 5 days. So better get on it. If you need help, you know how to get a hold of me. Just go ahead and comment here or anywhere on my page, or send me a direct message, or click the schedule time with me link on my cover photo. Or you can go to otanda.pro, OTANDA.pro is the website, and you can schedule time there. So there's all kinds of ways to get a hold of me and get help. So let's talk about estimated taxes. I've beat this drum pretty repeatedly. A couple of things. First, the IRS tax system is, in their mind, pay as you go. that means that they really do want you paying in money throughout the year. For W-2 wage earners, no thought process necessary. You do a W-4, they withhold both FICA tax as well as your federal and state withholding against income tax with every paycheck. And then at the end of the year, you sum the whole thing up on a 1040, and you either pay a little bit or you get a refund, or if you have other sources of income, other surprises can occur. But basically, if all you do is work one job and you fill out a W-4 with a reasonable amount of withholding, you should have a small income of, a small refund of under $1,000 from the federal government. Why under $1,000? That's my target. And the reason that I say that is that if you've got $4,000, $5,000, $6,000 sitting in the United States Treasury, that was basically your money all year, guess who's earning the interest on that? Uncle Sugar is a bad piggy bank. They're buying all the stuff that they buy with your money, and you're basically also, and this is the big thing, I don't know if I want this to upset you, but it should a little bit. If you've got $6,000 sitting in there, you're getting that kind of a refund, that's $500 a month that you lost the spending power of throughout the year. Think about that, and then adjust your W-4s, okay? Estimated taxes, the topic of this week, is basically the small business person or entrepreneur's version of withholding. Good news is that we only have to do it 4 times a year. April 15th, the deadline next Thursday, is the first one of 4. The other 3 are June 15th, September 15th, January 15th of the following year is for quarter 4. Now, if any of these dates fall on a Saturday or Sunday, it will be extended to the following Monday. So now, the bad news about that is that if you're not thinking about it and it's your first year in business and you're doing fairly decently, you're making money, you're not thinking about estimated taxes, and nobody telling you you have to do it. What happens is you go to file your taxes for the first year, the following year, and you get killed on with something called underpayment penalty. If you look at the second page of a Form 1040, the lines down at the bottom is either a refund or amount you owe. If you have an amount you owe of over $1,000, there'll be a little number next to that over to the left a little bit, and it says underpayment penalty. Yeah, that's because you didn't do estimated tax payments throughout the year. So that's the purpose behind that. And it's in your best interest, and I'll tell you why. Let's say you make $100,000 and you're going to owe about $20,000 in tax. If you're making a $5,000 payment in April, June, September, and January, guess what? You don't have that huge amount of money hanging over your head and needing to wipe out your entire savings account the following April. So it's just good budgetary planning too. So that's the purpose behind estimated taxes. It is the entrepreneur's version of pay-as-you-go. It is withholding. It is required even if you don't have somebody standing over you with a bullwhip, cracking it and making you do it. Some questions that come up, well, it's my first year in business and I really didn't make any money between January and March of 2021. That's fine. Actually, what a keystone of my practice is basically keeping an eye on income throughout the year and making appropriate estimated payments for each of those quarters as they come up. So the IRS has this worksheet, and they would like you to divide your tax liability by 4 from last year and pay those 1/4 amounts in April, June, September, and January. And you don't really want to do that. You didn't make much money in the first quarter, so you don't do it. Then you kind of end up blowing it off the rest of the year. Well, that's a problem. That's kind of a very simplistic way to do that. Honestly, if you're making an estimated payment that's in lockstep with the amount of money you made in the quarter that you're making the payment for, you're going to be fine. If they do calculate underpayment penalty, they do look at your income by quarter. Okay, so that's another thing to keep in mind. If you believe that you're going to owe over $1,000 in tax, then you are required to make estimated tax payments as the Internal Revenue Code on that. So if you are even at the lowest end, which is a 10% effective tax rate, that's somebody that's, and I think that's like under $30,000 a year, maybe 40. There's an exact number. It changes every year, and that's why I don't have it memorized. Okay, but that's also based on taxable income. So things are removed from your gross income to get to that number. Qualified business income deduction, the standard deduction. So let's say you're a 10% taxpayer. So if you are making less than, let's see, $1,000 be 40,000. So if you made less than $10,000 between January and March, and that's after expenses, not gross, and you really don't have it, it's okay. Don't panic. You can make a larger catch-up payment in June, or more exactly, if you are making less than $250,000 worth of taxable income, or less than $10,000 in the quarter, then you're looking at really not having to make a payment. So that's a thing to keep in mind. You can calculate these things easily. I have a 1040 tax calculator on my website, and let me show it to you, actually. I'm going to do a thing here now. First things first, let's bring this over to here. Let's make this big, and then I'm going to share a screen with you. Okay, so let's do this. Here's my rotating planet Earth wallpaper. It's kind of cool. So everybody says I'm pretty out there. What I want to do is go to otanda.pro. There you go. Now, if you go to the Resource Center and then Financial Calculators, okay, click on this. Scroll down. The very second one under Tax Calculator says 1040 Tax Calculator. Let's play a little bit here. So if you have an income from self-employment, first of all, let's do this part. Keep this real simple. You're a young single person, no kids, simple life, okay? So filing status single, you're not somebody else's dependent, you don't have any kids, and all the income you have all year is from self-employment, business income or loss, okay? It is subject to self-employment taxes. We talked about that last week with the S-Corp talk. So let's say you made $10,000 in the first quarter, January through March. So you made $10,000 in 3 months. There's 12 months in the year. Multiply by 4. Put in $40,000. Okay. So let's tab to save that, and we'll scroll down, scroll down, scroll down. Adjusted gross income. This is computing this automatically. You do get to write off 1/2 of your self-employment tax as a write-off to gross income. Your standard deduction is $12,400. Let's say you're young and you're not blind, so it's to charity. Let's leave all that blank because we just basically want to do an apples thing here. Taxable income. Now, your qualified business income deduction, that is the lower of 20% of your business income or your taxable income. So business income was 40,000, remember that? Taxable income 24,774. That's the smaller number. Next step, bring up a calculator. 24,774 and multiply it by 0.2 to get 20%. Let's round that up to 49.55. Put it in here. Okay. Yeah, now look, your taxable income went down even further. Total tax before credits, your income tax is going to be 2182. Total tax after credits is 7833. So actually, when I told you something about owing over $1,000 in tax, you wouldn't. Your taxes are estimated at 7833. Okay, so that's because of self-employment tax. And what you would do then is put the 7833 into here, divide it by 4, and that's the amount of your estimated payment. That's all you got to do, okay? In fact, I would just round that down to 1,900. Personally, I don't like, ooh, sorry about that. I was just doing that to demonstrate. So 1,900. And then when you make your June payment, now I know the government's got this goofy thing where you're making a estimated payment in the 5th and the 8th month of the year. But all you have to do is you can take the money that you've made for 5 months, divide it by 5, and then multiply it by 12 and plug it into here. Let's say, for example, that you had a good April and May. Maybe you're in some kind of business that works outdoors, and all of a sudden your $10,000 is now like $25,000. Okay, so let's put $25,000 in here. Okay, isn't this fun? 25,000 divided by 5. You made 5,000 a month. Multiply it by 12. 60,000 for the year. So let's go back up here. We'll keep you here. Go back up here. Change this to 60,000. Okay. Now we're going to go down to here, and you got 55,761. Total adjustments, standard deduction is still going to be 12,400. So your taxable income is now 38,406. Go in here, 38,406, and multiply by what? 20%. 7681. 7681. Okay. Income tax. Now, there's a thing in here. You've already made your $1,900 payment, right? Estimated tax payments that you made in April 15th. Punch that in here. Okay. Now, let's go ahead and scroll down. Your taxes are estimated at $12,561. Your total tax payments for the year were $1,900. Your outstanding tax bill is estimated at $10,661. Now, guess what? You only have 3 periods left, so divide this by 3. Oh, for goodness sakes. Let's do that again. Divided by 3. Okay, I'm doing something terrible here. Let's close this and just come back in. There you go. And you make a payment of, I'm going to tell you, just round it down to $3,500. Okay, that's how you do estimated taxes. I'll tell you what, this is the basic way I do them, except I do get more into your family situation. If you have a husband, if you have kids, you know, all the different things. So I do have an estimated tax payment program that I provide to small business entrepreneurs that are quite ready for S Corp. And if you have any questions about that, want to talk about that, there's all the different ways you have to get a hold of me. So you can shoot me a direct message or just put a comment in here. With that, do we have anybody with any questions? Let me go ahead and I'll get off the share here. I'm dying to watch this later, see what it looks like. So should be back to here. And does anybody have any questions at all about anything I talked about? It's kind of free lessons in estimated taxes. So I know it's there's a lot of math involved there, but if you basically just remember that there's going to be 4 estimated tax deadlines, that they will be April, June, September, and January the following year. And there's a way to extrapolate your income and figure out what your estimated tax payment is going to be for the remainder of the year. And you can always refer back to this. In fact, I think you can download these lives if you're nerdy enough to want to watch this over and over again. Probably not a bad idea, because you know the Facebook algorithm, sooner or later your videos disappear unless you save them or download them. So I think they've actually enabled something where you can download lives. So if you want to watch this again, you certainly could. Now, is there anybody out there that has a question at all? Because if there isn't, I'm going to wrap up early and go get myself some lunch. What do you think? Anybody? Okay, I'm not going to do the guy from Fearless Bueller. That is the funniest man. Ben Stein, remember him? I think he actually worked for Richard Nixon. Class. All right, I'm not getting any comments. So this has been Weekly Tax Talk, and we'll be back on Rocky Mountain High time next Saturday at noon. So please do plan on joining us. And we're kind of hoping to get a snowball going here. I kind of pick up some steam and pick up some people and have some fun with this thing. I kind of picture this with several people jumping in and actually making funny comments and turning this into a whole conversation. So whether you're here or not, we will be. So why don't you come join us? Have a great week and enjoy all the nice weather that we're having. So until next time, bye for now, and do something randomly kind for a stranger. Take care, okay? Bye-bye.